The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we near the end of 2024, look ahead to 2025. Can't believe I am saying that. It feels like time is just flying by. Of course, it's been an interesting year in terms of the grain and livestock markets, the overall ag economy, and it could be a very interesting year ahead. We want to talk about the current market outlook and look ahead a little bit to 2025. Joining us for a conversation as we dive into what's happening with the grain markets overall, Ed Usset with the University of Minnesota joins us. Ed, it is great to talk with you again, sir. Thanks for the time.
Jesse, thank you for having me back.
Well, let's just kind of start with a general wrap-up post-harvest grain market activity. Corn, soy, wheat. I know here in the last couple of weeks, we saw a little bit of a corn market rally. Soy's been a tough one, I think. Wheat, too. I guess just 1,000-foot view for us to start. What's your general impression here post-harvest and nearing the end of the year in the grain markets, Ed?
Well, we have had a bounce in the corn market. In fact, my calculation now, I'm a Minnesota boy, Jesse, so your listeners have to adjust accordingly. So I'll talk about southwestern Minnesota. Corn bids 410, 415 a bushel, and that's 15. Yeah, that's off their lows of just over 350 in the third week of August. That's a 15% bounce off the lows. But you are right. That soybean market, man, that thing. I think the corn market could go further in the months ahead. I don't want to get anyone wildly bullish, but I think the fundamentals are okay in the world of corn. It's that doggone soybean market is like a drag. It's going to be hard to move with that.
Very true. Well, and you mentioned a little bit of cash there too, and so maybe we rope that into the conversation. Thoughts on some of that cash basis and farmers' selling needs? I've heard from a few folks towards the end of the year saying, I don't really want to sell at these prices, but I probably should. It's been some folks' mentality. What are your thoughts there as we close out the books on 2024?
I have been preaching for months now since harvest, even going into harvest, look for rallies to sell. And I think that still has to be your mindset. In terms of, basis and things happening, I've got a very different view again, only because it's Minnesota. In Minnesota, we didn't have great crops. Illinois, Iowa, much of the Corn Belt have very, very good crops, if not record. And here in Minnesota, we set a record corn crop 2 years ago. We averaged 183 bushels per acre, which is 12 bushels per acre off the record. Soybean yields, we didn't even average 50. We got to 46. So we don't have the abundance of corn and soybeans, and it's showing in the basis. 2 weeks ago, I went to central South Dakota. South Dakota had a good crop, and I was amazed to hear our ethanol plants are paying option price 5 over, 10 over to get corn bought. In central South Dakota, the ethanol plant was at 50 under. That tells you how easy it was or it was much easier for that ethanol plant in South Dakota to get corn than the ones in Minnesota.
And I think that's a great point that just reiterates to folks that, cash bids, basis, push bids, there's so many different factors throughout different parts of the country and that can really have an impact. And that's why it comes down to your marketing is got to be based off your bottom line, your operation, because everyone's situation is different, right, Ed?
Yes, absolutely. Absolutely.
And it's something too that always interests me too. You mentioned, just short geographic, span like that to go from 10, 20 cents over to 50 under. And it's an interesting thing to think about. And a lot of times you get, I think, farmers that they really rely on the cash side of the market versus playing futures and options a lot of times, right, Ed?
Yeah, absolutely. And the cash markets can differ a lot. I'm still just shocked that there could be a 50-cent difference in the basis. Now, we're talking about a 2-3 hour drive away, at least 2 hours, and it's not cheap to move grain, but it shocked me to see the basis so poor. By the way, Jesse, in central South Dakota, they grow corn and cattle. And the cattle people were downright giddy. They were downright giddy. They're doing okay.
Yeah, that cattle industry has definitely been a bright spot, I think, for
Yeah.
2024. No doubt about it. Well, it's something I think is going to have impacts ag-wide tariff potential. We should talk about this. And I know this is something you've been on the winter speaking circuit. I'm sure this has been brought up in discussion. What is this potential with the incoming Trump administration 2.0? What could tariffs look like? What could we learn from round one with President Trump that could maybe give us some insight into what this could do for the markets? I mean, your perspective on this, Ed.
Well, 6 years ago, I was giving a talk titled Trade and Agriculture, just reminding people what I think a lot of your listeners know, that trade is so important to agriculture up and down the line, not just the grains, but the livestock, the dairy. We don't export milk, but we sure export whey and non-fat dried milk, other dairy products. So I was reminding people of that. I'm not going to make a bold prediction, but let me take you back to 2018 and the first trade war. I'm going to give you some numbers and your listeners too. In early May of 2018, before the trade war broke out full-fledged, southwestern Minnesota, soybeans were about cash price $9.60 a bushel. Corn was $3.60 a bushel. The good old days, right? It wasn't great prices, but that's where it was. Mid-May, the trade war breaks out, full-fledged. Mid-July 2018, this is just 10 weeks later, soybeans in Minnesota are $7.50. Corn is at $3 a bushel. You do the math, that is a 20% decrease in both prices in 10 weeks. Can trade have a big impact? Can a trade war, tariffs have a big impact on prices? Oh, yes, it can. Oh, yes, it can.
I wonder about this time around, maybe a difference for producers is input costs. Input costs have gone up dramatically compared to back then, 2018 time frame. There's already a bit of a cost price squeeze happening on the farm in rural America, Ed. So could higher input prices have a more negative impact this time around?
Well, I think they've already had a more negative impact. Every year I sort of sit down with my colleagues at the Center for Farm Financial Management here at the University of Minnesota, and we kind of estimate what production costs will be in the year ahead. And typically, I've been doing this for 2 decades. Typically, you have a year where prices drop pretty significantly, as they have here. Input prices are sticky. They never come down as fast, but they do come down some. We see some relief, some in there. It's never enough, but some relief. My colleagues assure me this year that despite the sharp drop in corn prices, wheat prices, soybean prices from a year ago, that production costs really haven't changed as we look ahead to 2025 versus 2024. And by my rough calculation, if we look at new crop bids for next harvest, we're probably in southwestern Minnesota $1 under production costs today. And in the case of soybeans, $2.50. It's not, I don't like it's the Christmas season, Jesse. I feel like the Grinch. I shouldn't be sharing this information, but it is what it is.
It's the reality that we have to contend with, unfortunately.
So,
That's just the truth of the matter. I
yes.
wonder, Ed, with all this in mind, and I want to talk about sustainable aviation fuel here in a minute, but just in terms of the acre mix for 2025, I know that conversation's already ongoing with folks. So, I mean, what could this acre mix potentially look like here when you factor in where commodity prices are, input prices, et cetera? You do some of those projections you mentioned. Your thoughts there?
Right now, I think the leaning will be towards more corn acres than soybean acres. The soybean market is just one sick puppy. Basis is not even particularly good. Uh, uh, the new crop prices are not particularly good. It's not much better over in the world of corn, but I think it's better than soybeans, and that's where we'll be leaning in the year ahead.
Well, something that I know you and I have talked about in the past is sustainable aviation fuel and the growth of that and the potential that that could have, especially for the soy side of the equation. Yet here we are, end of 2024. We still are waiting on quite a bit of clarity, I would say. A lot of projects have been halted as we wait on clarity on tax credit guidance and climate smart initiatives and more. And then with the new administration coming in, that could change the whole conversation entirely. So, your perspective on SAF here in the US and where that stands right now, Ed?
Well, SAF and renewable diesel, big topics in the world of ethanol and in soybean crushing. And a couple of you get little less than 2 years ago, I was starting to get pretty bullish about things in the soybean market based on all this increase in demand for renewable diesel and the new plants coming. We were going to need more soybean acres and so on. But if you do the math, and there's a professor out of the University of Illinois, Scott Irwin, who's doing the math, and he will tell you in short order. He'll tell you, boy, the demand for renewable diesel, the mandates, the tax credits, both federal and state and federal mandates, they add up to a big increase in demand for renewable diesel. Unfortunately, the supply side's growing even faster, much faster. And in fact, I think there are some, I think there have already been 6 or 7 new soy crushing facilities that have opened this year, with a couple more just months away, and even a few more in 2026. And the industry got ahead of itself. All those plants going, I'll bet there are some players very nervous, and yet, Jesse, you got a plant halfway built. You just don't walk away from it.
Mm-hmm. And it's an interesting conversation because, not only the US market, but the competition from, say, South America and the
Sure.
growth of their crops. I mean,
Um,
that's added to this entire outlook and conversation here over the last couple of years, Ed.
yeah, and they continue to grow. And I've never had the opportunity to go to South America, to Brazil, Argentina, see the land, but I am assured by very smart people that they are bringing more acres into production, and they can continue to do so for a while yet to come.
Well, Ed, as we think about things, and I'll kind of open this to you for final thoughts here. What else you're watching from your perspective? What do you want folks to think about with their risk management as we close the book on one year and roll into a new year? I mean, final thoughts from you, Ed. What do folks need to be thinking about right now?
Well, on old crop, I'll repeat myself. I'm looking for rallies to sell. We've got a rally going in corn now. I know it's a modest one. It's not the biggest rally in the world, but I've got to look at that as an opportunity if I'm behind on old crop sales. On new crop, the discussion gets harder. Like I say, the new crop December 25 corn contract is, in my estimation, $1 under production costs. The new crop November soybean contract is a minimum of $2.50 under production costs. And I'm not advocating pricing 2025 today, but Jesse, if we get back together here in March, April, May, out next spring, and we see some sort of a rally driven by who knows what, I'm going to be telling producers, you better get something on the books and hope to hell you're wrong, because those first sales will probably be, it's hard to make a sale when you know it's a loser, when you're not going to make much money, but sometimes you have to minimize the loss. That's the best you can do, because, why on earth would I sell at a 70-cent, what I know is maybe a 70-cent loss or price at that next spring? Well, because 70-cent loss is better than a buck or a $1.50 loss by heart. So that will be my clarion call next spring, but not right now. It's only December 16th.
Well, we will look forward to having that conversation coming up here next spring. And I know folks can find resources available from the Center for Farm Financial Management at the University of Minnesota. Just go to cffm.umn.edu for more. Ed Usset, University of Minnesota, always good to chat with you, sir. Merry Christmas, Happy New Year to you and yours, and we will talk to you in the new year.
Okay, Jesse, you too. Thank you for the time.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.